reported. Will China's government step in, or will they resist the optics of having to bail out one of these companies? And if Evergrande isn't too big to fail, what happens next? Let's welcome back Marco Papich. He's chief strategist at the Clock Tower Group and author of the new book, Geopolitical Alpha. And Dewardrick McNeil is managing director at Longview Global and a CNBC contributor. It's great to have you both here. Marco, let me just start with you. You know, again, the Evergrande issue has been out there for such a long time that everybody assumed nothing would be done about it. What do you think is now being done?
Well, I think that we should look at the other analogs in China that can provide us with some sense of where the Chinese policymakers are likely to take this. So one of the things that we've heard in China from onshore managers is that investors should really focus on restructuring of businesses such as the H&A Group, which is the beleaguered airline airport business that was recently, whose restructuring plan is now coming to the forefront. First of all, the sort of original founders, private holders of equity are going to be completely wiped out. But the business itself will be restructured. There will be a local provincial SOEs that will take over its airport business. There will be a private company called the Fangda Group that will actually take over its airline business. And that's interesting because that's a business that has nothing to do with airlines. In other words, the Chinese policymakers are splitting off the beleaguered H&A Group and giving it over to SOEs and other firms to ensure that sort of the businesses that rely on servicing the H&A Group are not impacted negatively. So that's likely to be the scenario for Evergrande as well.
And I think, Dewardrick, it's a great analogy because, you know, Evergrande is sprawling, has so many different businesses, and it's had, you know, different ones that it's sold over the years, and some it still retains. But fundamentally, there are people holding wealth management products. There are people who have, you know, had down payments on properties. And I think what Marco is saying is there's a way to keep them relatively whole while having the state sort of take this apart and figure it out. But Dewardrick, I guess I wanted to ask you a slightly different question, which is, you know, to kind of quote from Ling Wei's excellent piece in the Journal about all of this. She says, you know, Xi Jinping's campaign against private enterprise is far more ambitious than meets the eye. He's trying to roll back China's decades-long evolution towards Western-style capitalism and put the country on a different path entirely. So if she's right, and if that's the case, Dewardrick, then whether or not Evergrande is sort of dealt with is not the real issue for investors, right? The real issue is, you know, do they want exposure to that version of China?
Yeah, I think that's right, Kelly. Look, I think that we are very clear now that Xi Jinping has a different model in mind. We've talked about that a lot. I think with Evergrande specifically, though, let me say, I think given Xi's focus in that model, his real concern would be on cushioning the impact for retail and other vulnerable investors. And I think the big boys and girls will have to take a haircut. So I think that is coming. I don't think it will fail outright. It won't be a meltdown, but there's some pain coming. But I think absolutely right. The question is, are investors willing to take this ride with Xi Jinping and see where China's economy lands under this new sort of common prosperity narrative? I will also say, Kelly, that the debt problem in China has been around for a very long time, but few leaders have felt strong or secure enough to tackle it. So this tells me that Xi is pretty secure going into the 20th Party Congress, and he is really knocking heads and trying to restructure the economy.
An absolutely great point, because you would never take this kind of risk going into an almost unprecedented third term unless you felt as if you were able to have that kind of control over the economy. Marco, so what would your advice be to investors? You know, we had Jim Chanos yesterday who pointed out that China has not performed well if you look over the past decade. If China's market, broadly speaking, did not perform well over a decade in which it evolved more towards capitalism, how should we expect it to perform if it's now evolving away from that back towards something more socialist, more communist, as this reporting suggests?
Well, you know, in emerging markets, it's very dangerous to equate GDP growth with equity performance. In fact, you know, it's not a good guide at all. I think it's going to continue to be challenging to generate returns in China. At the same time, the people who are likely going to do the best job at it will be onshore managers. So there is still uncorrelated, you know, alpha to be generated in onshore markets. And one thing that I would say, so I don't disagree with anything that Dewardrick is saying, but I would say that it's ironic that what's happening with Evergrande is not actually part of the common prosperity writ large in the theme. And what I mean by that is that here's China trying to deleverage beautifully. It's trying to deal with its debt problems, which are really a a feature of the last decade, during which it was supposedly more capitalist. And yet it still has this debt problem. It's actually dealing with it in a very austere Washington consensus type of a way. It's not dealing with it in a socialist way. And yet that is the greatest risk to China's economy now. It's this irony that Chinese policymakers trying to do what's right will actually cause the entire economy to blow up. And that's why they're between a rock and a hard place. And I think that most investors assume that they're going to have to deal with Evergrande in a pretty sanguine way. I agree with that. I think Dewardrick does as well. The problem is so does the market. I mean, if you look at the 10-year, hasn't really rallied. If you look at copper prices, haven't really fallen. Iron has, but oil is holding steady. There's, the sanguine view is priced in by the markets, and that's what concerns me.
Very, very interesting. I'm glad you made that point. Guys, we have to leave it there. Marco Papich and Dewardrick McNeil, again, maybe a little bit of a warning there as to what extent China can allow this to unfold beautifully, if I can borrow Marco's turn of phrase.